friends, I'm Rocky Outcrop. This is Bitcoin Technical Analysis. Thank you so much for joining me. I really do hope that you hit that subscribe button and that like button because we've made it to 1,500 subscribers, which means we need a new target. What can our new target be? Let me know in the comments down below what you think is a realistic thing to be saying on the show. Of course, in yesterday's episodes, I made some outlandish target requests, such as 150 million or whatever. And some people actually thought that I was being serious and as a result couldn't watch the episodes. Isn't that funny? It certainly created a good laugh for other commenters out there. Right now, the prices have just dropped down $40. Actually, let's go down to the 5-minute time frame so you can see, the red candle here taking us down from the 11,420 area or so down to where we currently find the prices at 11,350. And there is a premium on the spot prices or on the CME prices compared to the spot ones. It actually looks like it's fairly close to $200 at the minute, but I expect to see the CME prices drop down a little bit over the next 5 to 10 minutes as well to accommodate that difference. We're looking at around about $130 premium on the CME. So that's actually probably one of the most bullish aspects that we can actually point out on the show today is indeed that premium existing at a little bit of a higher number than what it has done in the recent past. Okay, but that's about it. Over here on the spot prices, you can see that we have some lines out there, and without the context of the bigger time frames, it's harder to see what they are. Let me just dive back up towards the 24-hour time frame and take a look at that. And oh my goodness, what do we see here? Well, it came right up to where we talked about as it could be going up to in yesterday's episode and then sank back down again. It is uncanny how well this has been charted out for us on the show. I really do recommend you hit that subscribe button. I really, really do. What we've seen then with the prices is they drop back down below that fuzzy grey line that we had here at the 11,450 area or so, and actually have come down here towards the median line of this parallel channel and our lows today at 11,268, coming right in at this area. I think that this actually speaks for itself in a lot of ways. At least it does the speaking for me, you could say. If we look at this, what we have is a target to stay above if you want to remain bullish, and that is at the lowest, really, 11,268 or so, where we saw the prices go today, or things are looking a little bit bearish, quite tasty bearish, actually. And the next target towards the downside, of course, could be that 11,121 area where we were at the day before yesterday, all the ones in terms of support for us. And I drew this line in yesterday's episode, or just before filming yesterday's episode, to show us the lower side target. Now, movements down below this area are going to be very bearish, okay? And movements up above this area, while they're bullish, are not going to be very bullish until you move above this one. So our two sort of very lines can be this top one here, this grey fuzzy line in at about 11,800. That would be very much more bullish. And this very much more bearish line at 11,101, 11,111, and or so for the sort of bearish, quite bearish case. And then in the meantime, you've got this easy profit-taking risk management line, regardless of which way you want to play it. In yesterday's episode, what I spoke about was how movements above this could be kind of taken as a sort of, you could easily short this or long it with very easy to manage risk in at this line here, bearing in mind that anything up to the top end of this is going to be considered fake out territory. And what we've seen is exactly that. That's me putting money directly into your trading account when I tell you these things. And I really am quite pleased with it. I am quite pleased, I have to say. So that's good to see that the technical analysis is working. And it's not just yesterday's episode or whatever, it's every single one of them. So I'm going to really have to stop sort of self-congratulating myself. I do have a channel over there on the Discord for that. It's called R-Smoke, for blowing smoke up your own arse. So that's maybe where I should confine those comments to. But of course, that's just me kind of advertising the channel. Share it with your friends. YouTube.com/Rocky Outcrop. What are we looking at then on the charts? If I bring up the oscillators down below, we have this downward trend. It's visible on the 24-hour time frame, and we will go down to say the 4-hour time frame to kind of check in on it in a little bit more detail in just a moment or two. But just starting off here on the daily one, what do we have? Well, do we have any sort of hidden bearish divergence? Something to look out for first, rather than looking for the bullish divergence. because people call it hidden, which implies that it's hard to find, and well, it's actually easy to find. So let's just do that first. Looking at the tops, here's a top, here's one, and whatever. And what do we have here? That is lower and lower, or is it or not? Let's just bring it up big. Yep, of course. So there's no hidden bearish divergence. So that's kind of good to see on the RSI. Equally, the stochastics showing that there's no hidden bearish divergence there on that. The MACD, the DMI there, similar. In fact, although there is a question mark about this area, just where we saw the cross happen, is this actually hidden bearish divergence? Now, what I tend to do when I'm looking at the DMI is look at kind of, the for the highs and if it's going higher or not. If you're looking at the DM positive line, you could say that it's not hidden bearish divergence, but looking at the negative line, then maybe it actually is hidden bearish divergence. It kind of looks a little bit like we might have a taste of that just in here where we saw them crossing. So there's something. And then the MACD itself, well, it's just, converging towards the downside without any hidden bearish divergence that's particularly visible on that at all. So that's okay. What about then bullish divergence? Is there any of that on the go? And we can see these lows are just getting subsequently lower all the way down on all of these, including, of course, the DM positive here as well, going down the way, but going up the way here on the DM negative. So 1, 2, 3 lows there, which are all higher, and indeed that means that there's more strength with this, because it's going higher, and that's as this goes lower. So there's more strength towards the downside. So that's convergent. I know that that's a little bit counterintuitive how you would look at that, but that is how you would look at that, and we can see then, of course, that is, of course, not got any bullish divergence on the go. So on the daily time frame, we're not looking at anything that's just saying to us, hey, we really have to go long right now. We really have to. And instead, we can kind of stick with what is the current trend. Now, of course, that is only in terms of since the 17th of August. Zooming out a bit, you can see that we're very much in an uptrend since March, back here on the 13th of March, where we had those lows. So maybe we need to look at this section here and ask a couple of questions about it. And for instance, one of those questions that you could ask about it would be, are we looking at something like a head and shoulders or some other sort of distribution, top, some sort of Wyckoff top, something happening in here at the top, and you could say that in this zone that there is something of that nature. What's going to make me say that that's not the case any longer? Well, the first step towards that will obviously be moving up above this zone where it's our sort of easy to manage risk line here in the middle at that 11,470 zone. Then, of course, moving past that up towards the parallel channel tops, that we have this fake out white line here could be, we could be thinking about this fake out territory, but into this no man's land between the two parallel channels. That purple one in the background is also some more of that. Will we find resistance if we move past this line towards the top side in around about that zone again? It is possible, but if we were to go past that, then we're going up towards that 11,800 number, where we can say, as we said earlier on, that's sort of much more bullish line. And then after that, it kicks in again with our targets in the 12,150, 12,600 areas for upward movement. It'd probably be 12,700 probably by the time that you actually got there in terms of finding that resistance, which would be putting in a higher high than previous. So if we want to disregard the sort of the bearishness of this whole section, which really is quite bearish, all of it altogether, because what we have is this upward trend, which was very much bearishly divergent, followed up by a reversal in the price action, which has not been bullishly divergent and is just continuing to go down the way every day that we check in on the prices overall. So that's what we have in to look at. Movements then, of course, to say that we're kind of back into continuing with the macro trend, start off quite clearly with this 11,500 or 11,800 area where we have our previous high here, and then moving on up the way, we really do need to look towards that 12,300 and what we're going to call it, 12,300 closes, decent size closes above 12,320 or so that we can have a higher high in here. And let's see if that's bearishly divergent as well, which would be the fourth instance of bearish divergence among the major highs along the way. If we were to get that, having had three solid ones on the way up here, leading into this downward bit of price action. And that really does kind of sum up where we are right now in the charts. But let's check in with a couple other things we spoke about in the previous episode, yesterday's one, moving this out of the way to see did we actually fill in that gap. And we didn't fill it in. And coming down here in the most recent price action, where did the prices come to? Well, they came right up to where that gap is drawn in at, and they didn't fill it in then either. So looking down the way, we still have this gap below us on the CMEs, which is quite a clear gap here in at that 11,355 area, which should take you down to that 11,200 area. Bearing in mind then what we said about that, of course, with this line here, 11,121 or 11,111. As being the very bearish line. So filling that in could be quite bearish if we then do not get an immediate reversal after that point then towards the top side. And we could look towards these other targets we have in mind off the back of this wedge, which we didn't actually sort of fulfill earlier on when we broke out of it. And they would be down towards 11,000 flat area. And of course, 10,800 area where we have these two horizontal lines. And of course, the measured move itself, if you're to go measured movis extrematus on it, you'd be looking down towards 10,580. Now, if you were to say that there was to go down to here, then maybe you would call that perfect, right? And I just wanted to throw something out there about perfect and perfection for people, because I think it's important for people to realize and remember that there is no such thing as perfect in the world, and nobody can actually be perfect. You'll never be a perfect person aspiring to be perfect or to trade perfectly or anything. It really is a mistake. You'll not be able to do that. Instead, what you can do is aspire to be good. And if you aspire to be good, it's an achievable target and something that you can actually work towards iteratively yourself. And if you actually do that and think that way, then that already puts you in a position where you're better than the rest of the world almost in its entirety who doesn't think in those terms. And in relative terms, that actually makes you perfect. And relatively speaking, you would be perfect if that's how you thought. There's the best thing that you can take from the sort of English culture, that sort of British tea drinking culture. Cheers, that you can have, and that is the phrase perfectly fine. How are you doing? I'm perfectly fine. Of course you can be fine, and the most ideal form of fine is to be perfectly fine. That's the best that you could ever aspire to be. So if you incorporate that into your trading, you'll probably be a lot happier than if you think to yourself, how can I make my trading perfect? There's a couple other things that we've been talking about in recent past in terms of swing points in the RSIs and stochastics, the DMI, and whatever else as well when you're looking at the oscillators. And that comes in here at the neutral line. And if we see the price of the price action move towards the downside and the RSI tick past this neutral line here at the very middle, then that would be a sort of swing failure and be quite bearish as well. And I think that is looking at that and really overall in the 24-hour time frame is going to have to be perfectly fine for us. If we go down to the 4-hour time frame, then so we can kind of check in with things like additional types of divergence and whatever else, what do we have on the go? These are lows on the way down here of this downward trend, and during this period you've got low, and it's all coming in lower than the previous one. So there isn't any of that bullish divergence on the RSI. On the MACD, there's no sort of bullish divergence there really either, with this negative line having come up towards the 40 point here in the DMI. And while there was this bullish divergence over here on the MACD, as what led to us drawing in the fallen wedge structure, as we talk about from time to time, how you can sort of see correlation between those two. But actually coming in with this most recent load where we broke down below the structure of it, we can see that it wasn't actually bullishly divergent either. And if anything, actually what we have is hidden bearish divergence here in the 4-hour time frame with these most recent of highs. If I zoom in here and bring up the RSI, you can see we moved above the neutral line here. Well, we hadn't done that in the previous ups, and of course that then signals hidden bearish divergence for us. And I said that would only be the case yesterday when I was talking about this prematurely if we were to then come down and form that as being a local high and not take out our previous high over here at that 11,800 area. And we didn't do that. So of course now we could say that is indeed confirmed hidden bearish divergence on the go. The same showing up on the MACD, having had this bullish divergence play out as far as just coming back up towards this area for us to enable to set in that hidden bearish divergence. So what can I say? Nothing's looking particularly rosy. Just as a quick reminder then to folk, then what we do have is some sort of anticipated area to be filled on the CME chart here where this gap is. Perhaps in terms of the bullish case scenario, you could say that, well, we what we're seeing is the price action being sort of pulled into the gravity well of this thing, and maybe that is going to just be satisfied when we move past it, and that this isn't actually this is a fallen wedge, which is a more bullish pattern, you could say, and all that sort of stuff. And that would be great if it gets supported here at the edge and doesn't break down below it again. But let's just have a quick reminder about what happens with sort of failed patterns like that. Will they turn into parallel channels, just like we can see here? And on the 4-hour time frame, isn't that a beautiful candle coming right up to exactly where we said the price targets would be towards the top side if you wanted to take a hella good short? And you're already sat there with, if you did do that, if you were watching these episodes and you did already do that, you're already 2.5% to 3.5% in profit, depending on exactly how you got into that thing. And you may well have moved your stop into profit, and you are sitting pretty with a no risk trade. Isn't that wonderful? Wouldn't it be wonderful to trade like that all the time, having seen these episodes with us talking about the hidden bearish divergence here in the 4-hour time frame in this part of this downward trend? I think it probably would be. Therefore, I would highly recommend that you go ahead and hit that subscribe button. And if you want to, you can hit the join button to send some value back this direction. Big shout out to everybody who's already done that. I suppose I ought to check in actually with the channel. Just give me a second here and I'll check in on the YouTubes to see if I have got any more of those, because I should give a shout out to anybody who ever does that. So let me just check here. If we just jump over to this jobby, hit see more. Remember that joke from Simpsons when Bart phones up Moe's bar and he says, I'm looking for butts, like or whatever, see more butts. Hey, is there see more butts here? Anyway, so Seymour. Is Seymour been in? Seymour. So anyway, no, there's just the 4 people that we had before. So anyway, shout out to Tony, Phil, Tony, and Ekram for having done that. Good on you. Thank you so much. And for everybody as well who carried us over the 1,500 subscriber mark. That's really, really excellent. Let's see if we can get to 2,000 in a hurry. If we can do that in a sprint, that would be really lovely. Let's see if we can do that before, say, well, what's the date today? The 27th of August. How long do you think it'll take? How long do you think it'll take? You tell me down in the comments down below. Like I say, tell me a number and a date. What do you think is a good one to be asking for on the channel? In the meantime, just know that I highly appreciate everybody who hits that button. And of course, as well, let me just jump back over to the channel again. I read all of the comments and respond to them as much as I possibly can. 1.51 subscribers. Wow, that's my socks truly blowing off. I really, really, really genuinely do appreciate it. But if you see here in the comments section that there's a bunch of comments here, of course, which I really do need to respond to. What's this sort of thing? Never seen this before. I normally compare the charts in TradingView. Okay, that was a different episode. Thanks for that, Peter. Gives credits to the power of diversity. Little boost. Thanks for your comment, William. Thanks for your comment, Northwest Nerd. He's like Crypto's Graham Torrington. Thanks very much. Sikila. I'm here for the like button only, and Rocky Smooth Radio Jazz Voice. That's really lovely. All these sorts of things give me a massive boost in confidence, and I always super appreciate it. Even this one, thanks, Lar Pat. 6 minutes ago, you left a comment on a video that I put out. When did I put this video out? Let me just see a video from the past. When was it? When was this video? Hit pause. On March the 13th. Well, what a day for videos that was. In fact, March the 13th, wasn't that a great video? If we go back to then, you can see me singing about how using that song by Nina Simone about it's a new day, it's a new dawn, and I'm feeling good. And that was at the very bottom of the market. So like I say, hit like and subscribe, because we really do nail it on this channel. And thank you so much for tuning in today. I really do appreciate it. I'll be back again tomorrow. YouTube.com/Rocky Outcrop if you want to share it with your friends, which I know you do, because my goodness, a friend of yours is a friend of mine. And we are growing a fantastic community here, with everybody having been, so far that I've encountered in it, a really, really friendly and intelligent person. And you must be, because if you're finding this channel and enjoying it, that means that you have at least half a brain, and that is fantastic. So thanks so much. I'll see you next time. My name's Rocky Outcrop. Like I say, youtube.com/Rocky Outcrop. Share it with your friends. I'll be back tomorrow.